Hey, good afternoon, everybody. So this is going to be the watch list for Monday, July 8th. And as always, I want to start out with the overall economic news. As you know, we have some big numbers coming up this week. So a couple things you're going to want to watch. For the most part, on Monday, consumer credit, I'm not too worried about that. We know the consumer is in significant debt. Credit card debt is at an all-time high, over $1 trillion. So I don't think there's going to be any real new news that's going to move the markets. But the one thing you have to watch for on Tuesday is Jerome Powell is going to be doing a testimony to the Senate at 10 a.m. So that means this is Eastern time. So that means the markets are going to be open. And then he's talking to the House on Wednesday. So depending upon what you see Tuesday, you're probably going to get a follow through. So what are the senators and what are the government leaders going to be interested in? First and foremost is inflation. And what is Powell doing to bring down interest rates and to help the overall cost of housing? That is probably one of the biggest headwinds that we are dealing with right now as a society and as a community. I mean, home values are not coming down, right? Rents are insane. When you just look at what rental rates are and the lack of inventory in housing with high interest rates, the average American, over 30 to 40% of their monthly paycheck is just going to housing alone, right? That doesn't include anything from food, clothing, entertainment, anything along those lines. So if I had to guess, that's where they're going to be pushing the most amount of pressure as to what is he doing to lower rates to give homeowners some regression in expense. Now, think about this. If the Fed starts to lower rates, that means more people can then finance a home. Well, there's no inventory. So you're going to drive up the demand on no inventory. So then when people do decide to sell their house, they're going to get multiple offers. It's like this catch-22 that I think will be interesting to watch. How do we get out of? But Monday, I think you're clear to trade. No issues. Tuesday and Wednesday, you have to listen to what he's saying, okay? And then whatever is going to happen on Tuesday, it's probably going to get exasperated to the upside or to the downside on Wednesday. Thursday and Friday are some really big numbers. Again, we got jobless claims. We have the consumer price index. So again, consumer price index. What is happening with inflation? That's what all the eyes are on right now. And then the producer price index. What is it costing manufacturers to produce goods and services? So is the cost of input going up? And if the cost of input materials goes up, guess who pays more? The consumer. Okay. So that's what's going on with your overall market news. Monday, I think you're safe to trade. Tuesday, Wednesday, you're going to have some patience. And then Thursday, again, these will come out before the market even opens. So watch your pre-market high, your pre-market low, watch your overall trend, and don't fight it. So let's take a look at some charts if we could. So I'm going to go ahead and I'm going to look at a couple of the banks momentarily, but I want to start with SPY making an all-time high on a shortened holiday week with relatively low volume, right? Interesting. So what I would do here, we're just going to keep this on a 1-hour chart. I do have the supply and demand indicator turned on. I'm going to shut it off just for ease of use. Here's what I would look for. I'd want to see a pullback to this 550. Right now we're at 554.68. I would personally not be going long right out of the market. If anything, I'd love to see a pullback retest, which was prior overall supply, right? We had supply here, and I'd love to see it come down and then move higher. So my target for SPY to go long would be 550.12. If the market shows weakness, then you can obviously buy puts with this as your first price target. If it breaks through there, then what I would be looking for is where did we have prior rejections that turn to support? And that's about 543, 544. So pretty close, but you can see here we were trading in a range. We broke above. We want to come down, retest, move higher, come down, fail, head lower here. This would be your second bounce opportunity. And if not, then we would play it lower. And I can see right here that we have a gap on the market. So there's a gap right here that I would look for the market to fill if we have weakness. Okay. Next one I want to take a look at is the triple Qs. Again, exact same story here, guys. History kind of repeats itself. We always want to make sure we're using confluence trading. These trade together in lockstep. When they don't, be overly cautious. We're at 496.23. I'd love to see a pullback to 486.86. Now, that's a much further drop. So what fueled a lot of this was Tesla. Tesla was insane last week. I think it was up over 20%. So I would love to see some consolidation, a pullback to 486.86, give or take, and then to go long. Again, if we break this, what would I look for? Where did we have prior resistance that turned to support 1, 2, 3 times to move long? Here's your trading channel, 486 down to 475. Okay. Speaking of Tesla, let's take a look at that one. I mean, this thing, anytime that the RSI was at a 30, people who stepped in and bought were rewarded significantly. I mean, just look at this 1 hour chart. I mean, this thing just did not stop last week and give anybody an opportunity to buy. So what would I look for on this? This one, again, being cautious, but if you're going to get continued momentum to the upside, I'd be looking for a reject somewhere up here at this prior pivot at 263. So I think you could play that to the long side. Where would I love to see it come down to? Kind of these prior reject areas, right in here at about 197 to probably ballpark around 203. I mean, this would be ideal to see it come back down and retest and then move higher. I don't know that you're going to get that chance. So you're just going to have to watch volume. Look at the volume here. Volume just going through the roof. I mean, seriously, the last time we had this kind of volume on a 1 hour chart was all the way back here on Thursday, January 25th. I mean, you're talking almost 6 months that hasn't seen that kind of volume push this thing to new all-time highs. The other one making all-time highs, again, is Apple. What would I look for here? Again, it closed strong. And can it go higher? Absolutely. What would I love to see? I'd love to see it pull back here to about 218, 219 area, right? Where we rejected once, we rejected twice, then we came up, we used it as support, and then we fueled to the upside. So that's what I would be watching there. The other one that gained traction, it was kind of flirting back and forth all week. I was watching it while I was traveling, was Amazon. This one was a great opportunity where it just kept rejecting this 200 level. Couldn't get above it, couldn't get above it. I think if you can get above 200 and you can hold this, okay, $200.42, if you can get above this and hold this and see some consolidation and then take it to new all-time highs. NVIDIA's been in play. This one's been kind of backfilling and consolidation, so I do love to see this. So just for fun, let's just do a fib retracement level from the pivot high to the pivot low. And you'll note that we're not even approaching this 50% fib level, right? We're actually consolidating actually at a lower band, which typically isn't overly bullish. So what I would look for to go long on this one is a break above 129.40 with a target of 132, breaking above 132, going up to 135. And then lastly, we're going to be coming up on some earnings reports, but I want to take a look at a couple of the banks. One that hit an all-time high, yet again, the money center banks are just crushing it. Bank of America, Wells Fargo, Chase. You'll see here that we hit a prior resistance up here, right? Areas of interest. So it doesn't always have to be the very candle pivot high. You're going to want to look and see, where did we get the reject? Well, we got the reject around 205. We pushed up, we used it as support, we pushed up, and now we failed it. So if we fail this further and Powell has some not so nice words to say, what would I look for? Well, I would like to see us come back down where we had some prior consolidation, right? We couldn't break above, couldn't break above, couldn't break above. I'd love to see us break this level and use a price target on puts down to about 200, look for a bounce, and possibly go long. And then you guys know me, I like to play US Bank. It's kind of a revenge trade for me for multiple personal reasons, and I'm going to leave it at that. But you will note that this stock is just struggling immensely. It cannot break above, $40 and change to save its life. Now, the interesting thing is, if you'll note that we are somewhat on a bit of an uptrend, or we were until Friday's market close. So the bond market wasn't doing this thing any favors. I do not know why this trend line doesn't want to stick for me this morning. But you'll note that we were on a trend line, right? Bounce, 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 fail. What I would look for is to get strength and go long above the trend line. Now I'm going to do something different. I'm going to turn on the supply and demand indicator for this one. You'll see we're in heavy overall demand on a 2-hour, a 45-minute, a 4-hour. There's a lot of buyers down here. And you can see that because of all this consolidation. So the likelihood that we're going to push lower is not as high as the opportunity to go up. So what would I look for? Again, back to the trend line, which is about $39.25. And then if you can get above this and hold it, I would then definitely look to play it long to prior $40.79 your reject here. I don't think it's going to push any higher than that. I mean, just simply because the Fed keeps saying they don't even think they're going to lower rates this year. So if they're not going to lower rates this year, the regional banks are going to suffer. And there were 6 regional banks they got downgraded by Moody's because of concerns over commercial real estate. And it's interesting. I don't know about in your market, but here in Southern California, I'm noticing more and more strip malls are becoming vacant. Why is that? Freeman and I were talking about that on the way home from breakfast this morning. There were like 6 openings in the strip mall that were filled before we left for vacation. We came home a month later and now all these vacancies. Well, commercial real estate is financed on shorter term duration, right? 5-year, 7-year ARMs, 10-year, maybe if you're lucky. But you don't finance commercial real estate on 30-year notes like a mortgage. So when all of these landlords refinanced or bought their properties during COVID because everything was on sale, they locked in rates at 3%. Those 3% mortgages are now repricing at 6%, 7%, 8%, and they are not cash flowing. So what they're having to do is, as the rents are coming up for their tenants, they are dramatically increasing those rents. So the pizza shop that was paying $2,500 a month is now paying $5,000 a month. Well, how many more pizzas do you have to sell to pay the landlord because his interest rate just went up on variable rate credit, right? This is the danger and the concern with the banks in why the market doesn't like the regionals. The big money center banks, they don't have any issues. It's the regional banks where they're bread and butter. It's your U.S. Bank, your PNC, it's your Key, it's your Huntington, it's your Regions, it's SunTrust. It's all these banks that made their bread and butter in the real estate market, commercial real estate, to dial it in a little bit further. So could be some long-term value there in the banks, but you're not going to see it come to fruition until the Fed actually starts lowering rates to ease and prohibit possibly another credit cycle to the downside. So again, just my perspective, my opinion, take it for what it's worth. Over 35 years, I've been through enough of these cycles to watch how investors trade the stocks. And it is what it is. So anyways, I hope you found this extremely valuable. I am going to be kicking off another masterclass in August. So if you or anyone you know are interested, make sure that they jump on the wait list. It's going to fill up exceptionally fast. So you're not going to want to wait for this one. And then I might do one more before the year is up. And then I'll see everybody back in January. But for those of you that are on the watch list like this, I will be doing them throughout the rest of the year. So with that, I hope you have an amazing Sunday fun day, and we will talk to you very soon. Take care and see you later.